The first thing is we had 5% organic growth across our revenues, 6% in our non-transactions businesses, and about 3% in our transactions businesses. So the entire organization is really operating at full capacity, and we're really excited about all of the benefits we're seeing in our revenues. I think that in terms of our information services business is really growing because of our index business. It had a 21% increase in revenue year over year. And then in our market technology business, we had 13% organic growth. So those two are really the really shining stars within the group, but every single part of our business grew year over year, and I think that's a real testament to the overall business.
The market volatility that we're seeing right now has a lot of investors unnerved. In the bigger, broader picture, it's got people asking questions about whether companies will be able to go public, whether IPO business will be harmed by the volatility. Granted, it's not crazy volatility, it's just relative to what we've been used to recently. Things feel a little more erratic. Does that concern you at all? Do you hear anything from companies you've been courting to take public?
So I think it's a little too early to know whether this is just a short-term disruption in the overall market trend or whether it's a longer-term trend. Right now, we're not seeing any changes in companies' IPO plans. In fact, we've had 160 companies go public on Nasdaq so far this year versus 96 year-to-date last year. So it has been a very strong year for companies wanting to tap the public markets. In terms of looking forward, we still have an incredibly healthy pipeline of companies looking to go public before the end of the year and then in the first half of next year. I think it's just, in terms of the market volatility, we'll have to see whether, if it persists, it might change some plans. But right now, it's not changing anything.
Any change in appetite among Chinese issuers? Because I know that's been a big source of listings, given everything else going on.
We have had a good year for companies looking from China coming to the U.S. markets. I'd say that most of the companies, the larger companies, have really already come to market. So there are a couple that are considering it, and they may have moved a quarter or two in their plans, but right now it's not that they're canceling anything. They're just kind of moving them back a bit.
Adena, the big kind of whales that we've been waiting for, some of those massive unicorns that have been out there, some of them are expected to come maybe early next year. People talk about Uber, about Lyft, and some of these other companies. I know you've been frustrated just at the idea at how much longer companies are staying private, how much longer it takes for them to go to IPO. Do you think that as we see less liquidity out there, that companies will be forced to come to market more quickly than they have been the last several years?
Yeah, I wouldn't say that the companies are at all feeling like they might be forced to come to market. There is still an enormous amount of private capital available to be put to work within the private ecosystem. In fact, we just had our 200th private transaction in the Nasdaq private market last week, and we've accommodated about over $10 billion worth of private transactions so far this year. So looking into next year, I don't think the companies that are looking to tap the markets feel at all pressured to do it. It has more to do with it. They're just ready. They're ready to work within the public markets.
But you've spoken pretty publicly about how retail investors don't get a shot at some of these companies because they're staying private so much longer. They don't want the scrutiny from either regulators or the media.
Yeah, that is one of our great frustrations, is just making it so that the public markets are an inviting place for these companies to come. And you're right, there are more companies looking to come to the market next year that have stayed private for a long time. But it would have been nice if those investors had had the opportunity to invest in them years ago and be able to ride their growth. But I agree with you that there are more companies looking to tap the public markets. So we'll have to see whether they will.
I mean, I just feel like you're getting to the point where maybe the music is winding down. If the Fed is trying to dry up liquidity, there's not going to be as much liquidity out there in the private markets to keep these companies private. If they wait until that dries up entirely, there's a chance that it could be a rougher public market to try and enter at that point, too.
Well, I actually would say that the private capital that's been raised is long-term capital, and it's coming from a plethora of sources. So I don't believe that you're going to see that private capital suddenly dry up. We're talking, about many billions of dollars available to put to work for private companies. In terms of the terms that those private companies might get in a less vibrant environment, they might have to accept different terms to get that capital, and that might make it so that they look at the public markets a little differently than they do today. But at the same time, I think that it's good for them to be healthy. They're taking a healthy look at the public markets now and realizing that this could be the right time, the right environment for them to come into the public markets. So we're hopeful.
Do you feel like you're winning against that other place down?
Well, we've had a 71% win rate so far this year, 76%.
I mean, Farley gave up. He just trying to compete with you. He threw in the towel.
Yeah, and one of the great stats that we have is that we have 90% of venture-backed companies have chosen Nasdaq this year. Okay. So we are feeling very good about.
Very gracious when I say you didn't even take the bait about because of these friends of ours of us.
Well, I look at it as healthy competition.
There you go. It makes everyone better. what I've heard.
I absolutely agree with that.
I
As a
agree.
result of competition, we innovate every
All
day.
right.